Hi everyone, and today in this video we are going to read about one small interesting company which I think it might perform very good in the coming future. And one of the main reason why we are going to read about this company is because Mukul Agarwal, who is one of the biggest investor in India, so recently he has bought 6 companies in his portfolio, and one of the company which we are going to discuss today is Osel Devices. And recently in last month he has bought almost 80 crore worth of stocks. So let's start with the video, and anything we discuss over here is not a buy or sell recommendation. So first, let's understand that what the company do. The first one is the hearing aids, the second one is the LED displays, and third one is the mobile phones. So this company is headquartered in Delhi, and they are the end-to-end manufacturer of the LED displays and the hearing aid devices. And one of the interesting point of the company is that they have recently entered into the mobile phone segment, and as of now they have 15,000 square feet of capacity to make the LED displays and the devices, and they also produce 4 lakh units of hearing aids per year. Then within the hearing aids part, there are 4 product types. The first one is a standard behind the ear. So this one is suitable for those people who have moderate to severe hearing loss. Then the second one they have is the mini behind the ear, and this one is suitable for those people who have less issues compared to the above one. Then afterwards they also have receiver in the ear and receiver in canal. So the image they have attached over here is the perfect example of the receiver hearing aid. Then if you look at revenue contribution, so in the first half of FY26 almost 35% is coming from this segment, and from H1 FY25 till H1 FY26, so they have realized only 0.7% year-on-year growth. So this is definitely not a good sign in this revenue segment. Then if we come to the next revenue segment, it is the LED displays. So within the LED displays, there are 4 types, and they are used in different type of scenarios. So first one, for example, is the indoor one, where it is used in the retail corporates or in public events. Then it is also used in the outdoor display, and also if any company want to do the advertisement. And if you look at their current revenue contribution, so currently in H1 FY26 almost 50% is coming from this segment. And one of the best part is their YOY revenue growth. So from H1 FY25 till H1 FY26, they have given a growth of almost 100%. So that's a huge growth we are witnessing in this segment. And then this is the last revenue segment they have, which is the mobile phone and tablets. And within this revenue segment, the revenue contribution is almost 16%. So compared to the last quarter, which was 0%, now this revenue segment is contributing nicely. Then next, if you look at the future projections which the company has given, so in the coming future, they are targeting that the medical equipment will come down to 20%, the LED display segment will come to almost 30%, then in the mobile phone and tablet segment, they are expecting that it will reach 30%, and lastly in the OEM LED segment, they are expecting it will be 20%. Then if you look at EBITDA margin wise, even though the margins in the medical segment are way higher compared to the displays and mobile phone segment, they are trying to reduce their revenue contribution in the medical segment. And one of the main reason is the growth driver they have mentioned over here, that the volume growth in the display and the mobile phone segment is much higher. Then afterwards, if you look at some certifications, so they already have got BIS license for the hearing aid part, which builds their credibility in this industry. And another important point is they also have MD5 certification, which is very difficult to obtain in this field. Now if you look at the hearing aid industry data point, so currently India is selling 7 lakh hearing aids, but even after that, we are doing treatment of less than 3% of the whole patients. And currently in India, there is only one audiologist for 5 lakh people. So we can already see there is a very big mismatch in this industry. And because of this reason, we need to increase the awareness among all the Indians. Then afterwards, currently the hearing aid market in India is valued at almost $235 million, and that number is almost expected to come to $376 million by 2033. And over here, we can see different type of models in the hearing aid part and their cost structure. Like for example, in the basic models, which cost between 10 to 30,000, in the mid-range model, it costs between 30,000 to 1 lakh rupees, and then comes the premium model, which ranges from 1 lakh to 4 lakh rupees. So we can say that the devices are not that cheap for an average Indian guy. Then afterwards, there is one interesting data point that currently 69% of medical devices sold in the USA are made out of USA. And by reading this data point, we can definitely say that Osel Devices might benefit because of this reason. And currently, India is exporting 31,000 crore worth of medical devices, and our exports are growing at 14% rate annually. Then if we come to the LED display industry data point, so in FY24 our market is valued at almost $0.8 billion, and that number is expected to become almost $1.3 billion by FY 2033. And the reason why we are expecting this huge growth in this segment is because of the huge demand in the sectors like retail, sports, transportation and hospitality. And as we already know that many companies are coming with their IPO, so anyone who want to advertise their company, they will use this technique. Then afterwards, if you look at some of their big clients, they have PVR Cinemas, then HP Petroleum, NBCC, Levi's. In the banking segment, there is IndusInd Bank. Then in the educational segment, there is Sharda University. And in the media segment, there is India News and India TV. So after looking at these clients, we can definitely say that this company has good brand recognition. And now let's come to one of the interesting moves they have done over here. So they have partnered with Philips, and along with Philips, they have entered into the Indian mobile segment. And over here, Osel is going to lead into the product manufacturing to the marketing and distribution part. And as we can see in this image, so they are currently making this button mobile phones, and the main focus of the company over here is they want to enter into the tier 2 cities. And one of the main reason we can see over here is that people are still not able to use the touchscreen mobiles, and for calling purpose, I think these button mobiles are the best one. And now let's take a look at some of their financial ratios. So currently with a market cap of almost 1000 crores. So for those who don't know, SME companies are those companies where you can't buy single share and you need to buy a lot with X number of shares. Then afterwards, currently their stock P is 42, and if you look at their ROC and ROE, it is more than 30%. And one of the best part is their PEG ratio, which is 0.38. So in my opinion, after looking these financial ratios, the company is looking good and undervalued. Then afterwards, if you look at their P ratio, so currently their 1 year median P is showing over 23.6, and currently they have almost 40 of P. So compared to their 40 P, it might look overvalued, but as the company is a small cap, if they give consistently good results, so the PE re-rating will take care of it. And if we compare their PE ratio with the blue EPS bar, so it's looking undervalued. So by looking this, what do you guys think? Write it down in the comment section. Then afterwards, if you look at their current financial numbers, so today they have given their results. So in September 23, they had a revenue of 51 crores, and as of September 25, they have almost reached to 150 crores. So that's a 3x growth in 2 years. Then if you look at their operating profit, so from 9 crores, they have come up to 25 crores in September 25. And their EBITDA margins have fluctuated a bit in the last few months, but 17% is something they have been able to sustain. And lastly, if you look at the net profit, so from 5 crores, they have come up to 15 crores. And one other point we can see over here, that their interest went from 2 crores to 4 crores in 6 months. Then afterwards, if you look at their yearly numbers, so in March 21, they had a revenue of 57 crores, and as of now, their revenue has went up to almost 250 crores. And just look at their EBITDA margin growth, so from 5%, it has come up to 18%. And lastly, if you look at the net profit, so from 1 crores, now currently they have reached to 27 crores. And even if you look at their compounded sales and profit growth, so in the 3 years, their compounded sales growth has been 42% and profit growth has been more than 100%. So we can definitely say that it is currently a consistent compounder. Then afterwards, if you look at their current balance sheet, so before March 25, their borrowings were more compared to the reserves they had, but after March 25, and we can see over here that currently they have reserves of 159 crores and they have borrowings of 100 crores, and most of the borrowings are short-term borrowings. So we can interpret over here that after the IPO, most of the proceedings will be used to repay the debt. Then afterwards, if you look at their current cash flow statement, so this is one of the negative part in the company where currently their CFO is negative 38 crores, but overall the net cash flow is positive 14 crores. Then afterwards, if you look at their current cash conversion cycle, so from 35 days, it has increased to 156 days. So this is again a very big red flag in the company. And one of the main reason why this has increased is because of the receivable days, which went up from 73 days to 128 days. So debtor days is also called receivable days, and it means that they are selling their products but they are earning the money afterwards. And even their inventory days went up from 91 to to 104 days. So we can say over here that they are slightly facing issues in order to selling their inventory. Then next, if you look at their current shareholding pattern, so currently promoters are having 65% in the company. Then FI holdings have reduced from 4% to almost 0.6%. Then in the DIS, the holdings have reduced from 5.8% to almost 3.9%. And currently, there are two DIS with the name of Invicta Quantium Fund and Ventura Capital. And lastly, if you look at their current public holdings, which went up from 22% to 30%. And one of the main reason, as we already saw, that Mukul Agarwal, so he has bought 7.5% stake in the company. And now, let's come to the last part and we will do the technical analysis. So last year, around September 24, they got listed around 200 rupees, and after that, the stock has been volatile where they made a high of 350 rupees and again came down to 200 rupees. But after July 25, the stock went up from 300 rupees and now currently it's trading around 650 rupees. So as of now, we can say that the company is trading in good upward momentum, and after their good quarterly results, we can expect that it will continue to run in the same momentum. And if anyone who thinks to buy this company, what will be the percentage allocation of this company in the whole portfolio? Write it down in the comment section and see you in the next video.